Mark, what's your forecast for average selling price for the Apple iPhone in 2018?
Well, that's a good question. I think, this is not going to be a year where the X/10 is going to have broad availability. The new phones obviously will be on order starting later this month. I don't have a bottoms-up analysis on pricing, but I think they're going to skew the market a lot higher, and the ASPs on there are not only going higher this year, but they will go higher next year, just given the way they're segmenting the market.
What's that going to do to earnings, and when does that start to get baked in?
I think you'll see a lot of that next year. I think, again, you're going to have a catalyst because as ASPs go up and the units, I think, will continue to accelerate, and globally they'll start to accelerate. That'll make revenue as well as the model look better. Again, as you look at margins increase, this will look less and less like just a pure hardware company and more like a software company that will get a bigger multiple. And when you have operating margin expansion as well as revenue growth, you got exponential return potential.
Binky Chadha, if you strip down the S&P 500 into its individual components, the sectors, you'll see techs at 23%, more than 23%. You said you were long the financials, you're long the S&P 500. You've got to be long tech as well, essentially, too.
I would argue that you want to be neutral tech here. I would argue that the way you want to think about, from a style and sector point of view, I would argue a very simple way of thinking about where the S&P 500 today is if you break it up into value and growth. So you can take a look at, the S&P pure value and pure growth indices. If you take a look at how they've done over the course of the last 7 years, so that's most of this cycle, there's a 15% band. We are sitting at the bottom of the band. Previous times that we've sat at the bottom of this band, relative valuation is summer of 2010, when the market was down 15%. We were all afraid of a double-dip recession. August, September 2011, when the U.S. debt was downgraded. In 2012, the European financial crisis. I can continue, but I would argue the market's up 11%, and we are sitting at the bottom of the band. The market is essentially pricing no cyclical growth, and so you want to be long value relative to growth, and growth is where a lot of tech ends up.